shit works. I know how to turn it off and turn it on. I know how to take pictures of myself. Nice, a beautiful t-shirt.
I know the shirt. As in the...
Oh my god, my dreams. And NYP's okay, I need to sign up. Can you break pull up the t-shirt? No, I just need to see. Okay, I need to read out.
Why do you want to
it's actually quite interesting. Go check the email. I think it's for everyone. I've been to a lot of companies. It is, so a lot of the times what you do is you have LinkedIn and you go around asking for it wasn't somebody complaining about it yet. No. Mr. Andre. Okay, the next part is first. What do you want to do?
Young Chapel.
Right. That's true. Contact number is 23 or 22 dollars. Okay. The idiot actually. Don't try not from Moscow. Moscow is
Dude, he even taxi.
he is from Moscow. Yeah, we're the same class. We used to be. You know Chinese name, right? No, it's not. 20 in December last year. 19, right? Yeah, 3 years older.
Because you open 20 then you change to 20.
Oh my god, can you ask them for? That means the shop will be minus one. As of last year December. I'm just gonna put 20. You are Preston to 19, right? Yeah.
Good evening, ladies and gentlemen. I'm Lahan. I'm Sarah. And we are both from Singapore Polytechnic's Youth Investment Collective. And together, we will be your MCs for today. Welcome to SP's Investment Forum 2025, a collaboration between final year banking and finance students from Singapore Polytechnic, GEMCOM, Maybank Securities, and SGX. The world of investment is constantly evolving, and understanding key market trends is crucial for staying ahead. In this forum, we will explore how macroeconomic force shapes investment opportunities and dive deeper into how the world of small and mid-cap investing and uncover strategies to master the art of capital markets. Whether you are a beginner or an experienced investor, this forum will equip you with valuable insights to navigate today's dynamic market landscape with confidence. Now, let us discover how to make smarter investment decisions by leveraging macro trends and capital market expertise.
To start off, we have Mr. Dylan Wickremesinghe, Head of Research Singapore and Regional Head of Financials at Maybank Securities. Mr. Dylan leads institutional and retail equity research focusing on Singapore market strategy, sector analysis, and regional banking strategies. With nearly 20 years of experience, his client portfolio includes some of the world's largest sovereign wealth funds, mutual funds, hedge funds, and family offices. He has also won several industry awards, including Asia Money and Stubby. We have an exciting program lined up today, running until 7 p.m. Thank you for joining us today, and to start off this forum, Mr. Dylan will share his insights on the current macroeconomic environment and dive deeper into small and mid-cap investing. Let us welcome Mr. Dylan.
Okay, good afternoon, everyone. Good afternoon, everyone.
Good afternoon.
Okay. Before I start, I've got two questions. Okay, show of hands. Who has a trading account? Who has an equities trading account? One guy over there. Okay. I hope at the end of this, I've convinced more of you to have more trading accounts. I said I had a second question. Justin Timberlake. How many of you know who Justin Timberlake is? Okay, a little bit more than trading accounts. You know, back in 2006, Justin Timberlake had a hit was called "Sexy Back," and 2006, incidentally, was the last great Singapore bull market. Right, the STI actually went from around 2,222 to about 3,760. Right, at the peak of the rally. Right? So the reason I want to bring that up and why I'm bringing Justin Timberlake up is I'm going to say that Singapore is going to bring sexy back again. So this is why you need to have a trading account. Why do I say that? So I'm mostly going to talk about Singapore today, but at the Q&A I'm happy to take questions from from the other markets and other areas that you're interested in. And I've only got about 15 minutes to talk, so let me just get down to it. The first thing I want to say is Singapore is in a really, really great place from economic point of view. Right? It's actually been one of the best situations in a very, very long time. Largely, we've got very, very punchy economic growth that we're expecting coming through. For a $500 billion economy to be growing at 2.6% this year, with potential upgrades coming through, is a pretty big deal. Given the fact that just last year the economy grew at 4%. Inflation's coming off. A lot of issues with inflation around the world. Inflation actually coming off to where the MAS is quite comfortable with. Interest rates in Singapore, SORA is actually falling as well. So we are in a pretty good situation. I'm not going to go through all these slides. If anyone wants to have a look at all the slides, drop me a message and I will share at that point. In terms of capital inflows, this is one of the key charts that you need to have a look at. More and more people are bringing money into Singapore, right? And it's coming in at such a fast pace. The MAS has had to clean up and actually transfer some of the reserves to GIC very, very fast, right? So that again is a good place to be in, given if you look at what's been happening all over the world right now. As I said, GDP has grown very, very strongly. The red line over there is year-on-year growth. That's up to about 4.3%, largely driven by construction and manufacturing. And put a pin on manufacturing. The reason why that's important is this guy called Trump. Have you heard of him? Show of hands? Yeah? Okay, guys, you need to interact with me, okay? This is not a YouTube video, okay? The reason why that is important is because he said a very interesting sentence, right? He said, tariff is the most beautiful bird in the English language, right? And because everyone thinks that he's going to be throwing tariffs at everyone, people have been buying stuff beforehand. So a lot of manufacturing in Singapore is basically countries coming in and telling Singapore, we need to buy your stuff right now before he slaps tariffs on you, right? So that's actually driving manufacturing up. And it's also, and also construction is also rising in Singapore as well, and I'll tell you why that is in a bit. But one area that is actually not doing really well is retail, right? I think if you go around to restaurants and stuff like that versus during the COVID time or just after COVID time, getting a reservation is a lot more easier now. And the reason is a lot of Singaporeans are going, I don't need to spend money here, I can go to Japan and buy my sushi a lot cheaper, right? So spending outside of Singapore has actually now gone above pre-pandemic levels, right? So a lot of Singaporeans are traveling, a lot of Singaporeans are spending overseas, and that's actually not really good for retail. But the other parts of the economy are actually doing really well. This is what I said about construction. So we've got a lot of massive mega projects that are coming up that government has announced, right? The Tuas Megaport, Changi Terminal 5, more and more new HDBs. So there's a construction frenzy. A lot of this stuff hasn't really happened in the last few years because we haven't had the workers, we had COVID. Now a lot of these things are being pushed forward. So there's going to be a massive construction boom as well. So you've got manufacturing going at a very, very high clip. You've got construction happening, and the services industry, particularly the financial services sector, is doing quite well. And that's about 12-13% of GDP. So it's a big chunk of GDP. As I said, a lot of money coming into Singapore. There's a need for bankers, lawyers, everyone else to help manage that money. Okay? So, and this is the other part. The labor market is actually very, very tight, right? Unemployment is very low. It's a very tight labor market, while you have an economy that is growing very fast. So that means that it's a great time for jobs because you're going to see a significant amount of hiring that is happening across companies. And you can actually see that on that right-hand chart over there, pretty much 8 out of 9 industries in Singapore are looking to hire people, right? So great place, great time, and look at households. Debt is amongst the lowest, and household net wealth is amongst the highest, right? So you've got almost perfect conditions for economy to boom, right? So that kind of brings me, I'm not going to talk about property because we'll be here for a long time, but let me jump into the markets. So all of this, the markets have started to realize, right? And this is why, so far this year, Singapore is actually one of the best performing markets in Southeast Asia. And 2024 as well, it was the best performing market in Southeast Asia. But if you look at the right-hand chart, you notice something. The performance has been very, very narrow. It's been the banks, the telcos, which is basically Singtel, and a few other materials companies. Pretty much every other sector, from REITs and everything else, hasn't actually done particularly well. For me, that's actually good news, because that means when the rally starts to really catch on, a lot of those downward-facing lines will start to turn the other way. So keep an eye on some of those lagging sectors. And part of this is this. This is data from SGX, and you see those black lines on both of those charts. that actually shows institutional investors. And for Singapore, most of the market is actually driven by institutional investors, not retail investors. And the institutional investors have been driving more and more liquidity towards some of these key sectors. And we think that most of the other sectors will also start to follow. So, why do I think that's going to happen? It's going to happen because of 4 major drivers that you're going to see this year. The first one is safe haven. Remember that guy Trump who's slapping on all those tariffs on everyone, and on Mexico and Canada and China and everywhere else? One of the things that he hates is the fact that if you have a trade, if the US has a trade deficit with whatever that country is. Look at that left-hand chart, which is most of the Southeast Asian countries, and look where Singapore is. Singapore actually has a trade deficit with the US. That kind of already puts us not in the naughty list, but in the kind of good list. I mean, Trump, you never know, but kind of good list, right? And that's important because of the right-hand chart. I really like showing people this chart because this actually shows that for a lot of Singaporean companies, because Singapore in itself is really small and a lot of Singaporean companies are really big, they actually go outside of Singapore to do business. And a large part of their earnings are driven by inter-regional business. And this is actually UOB, which is the second largest bank in Singapore. And if you actually look at their wholesale banking, a large chunk of their earnings actually come from doing business within the region. So again, it will actually help Singapore when you actually have these issues of Trump and things like that, simply because a lot of countries will decide, we better move some of our production facilities or our services to Singapore to escape Trump. Number 2, China, right? China so far has been this sleeping giant in a way. It hasn't been able to get its act together since COVID. They can't get growth out of China. But look at that red line. That red line on the left-hand chart shows government expenditure. China is pushing in a lot of money into their economy. At some point, that's going to catch fire, and that's going to drive consumer demand in China. That's what they're trying to do. They're trying to revive the Chinese economy. Now look at the right-hand chart. The right-hand chart shows the top 50 largest companies in Singapore, and a lot of them actually generate earnings out of China. So if China booms, you're going to have earnings coming through to Singapore simply because a lot of them work in China. So that's actually quite good for the market. Number 3, a lot of companies in Singapore are very, very strong in terms of balance sheets. Right? So if you look at the top 50 market cap companies and you see the percentage of cash that they have on their balance sheets, it's actually very, very high. And when companies have a lot of cash like this, one of the things that they want to do is to give back to shareholders. So we actually think that the dividends will start to flow for a lot of companies going forward. So again, if you don't have a trading account, open a trading account because you'll get a little bit of dividends as well if you start investing now. And then finally, AI. I know everyone talks about AI, and so I'm not going to talk about AI and what it can do and what it can't do. But what I can tell you is, if you take a lot of the regional countries versus Singapore, Singapore's been leading in terms of AI investments. And that's actually going to start showing in a lot of companies. Like a lot of companies that I talk to as an analyst, I can already see them implementing AI, right? And as they start implementing these things, what happens? Productivity goes up, new revenues come in, costs fall. So which actually helps in this part, which is cash, because they get to save cash, which then they will give it to you, the shareholders. So again, I think you're going to have Singapore kind of leading that way. So I think 4 things that's going to drive the Singapore market this year and going to bring sexy back. But that's not all. There's 3 what I call super catalysts, right? First is the Johor Singapore Special Economic Zone that both governments have announced, and we actually are very, very excited about it because we think that it actually solves a lot of problems, both Malaysia and Singapore. Singapore from a high cost operating environment, they can help, they can take some of those costs to Malaysia, and Malaysia it helps create jobs domestically. So I think this will help a lot of Singaporean companies. Two is the MAS review, right, which is to make Singapore equities great again. So the government is also saying we want to make Singapore equities great again. So while we don't think, you know, it will be able to accomplish everything that people are wishing for, some things will probably happen. And I think some things are still better than nothing, and I think that's important. And third is market date, February 18th, not February 14th. February 18th is actually much more important because that's the budget date. And the reason why that is this time, the government, as you know, quite likely will go into an election. And they've got a very, very big budget surplus, which means they're going to be spending a lot on you, right? So all that is going to help the domestic economy and drive a lot of consumer spending. So these are all super catalysts that I think will also drive the overall market. So generally very, very positive, very bullish on the Singapore market. This is how we are kind of looking at as a brokerage, as a research house, how the different sectors will do this year. So things like banking, gaming, industrials, internet names, telcos, small and mid caps will all do pretty well. Now, I just want to change track a little bit and talk about small and mid caps. And the reason why I want to talk about small and mid caps is about 1/5 of the Singapore market is in the $200 million to $5 billion sort of range, which is kind of like, you know, decent small mid caps. So if you want to make some alpha returns, right, and you have the ability to do a bit of work, right, and you have the discipline to do that work and stick to your convictions, then you should look at small and mid cap investing. And I'll show you a chart as to why you should do it after I tell you the process. Your prof Simeon asked me to kind of mention what the process that we use in Maybank to look at small and mid caps, and I've actually listed it out, right? So we kind of look at 3 different areas. We look at fundamental analysis. So we look at we screen for companies that have good balance sheets. We screen for companies that have growth in terms of revenues and earnings, and whether their margins are actually growing. We also then look at valuation. So are these companies too expensive or too cheap, right? So if it's too expensive, then we ignore them. Are they in industries that are growing? Or do they have something really special? Do they have a niche that not anyone else can get into, right? And then we look at management. And for small and mid caps, that number 4 is probably the most important. You can have the best looking balance sheet and the best looking valuations you want, but if the management's crap, you're going to lose money. So you need to spend a lot of time trying to figure out whether you have actually competent and transparent management. And that's what I would say in our team. And you can ask my analysts, I challenge them a lot when they come up with small and mid cap ideas. That's probably 80% of what we spend time on. And then you have the qualitative positions, right? I mean, are there barriers to entry for these companies? How are they spending money on innovation? How are they changing with the markets, right? And how are they positioned in terms of regulation? And then it's that bottom part, right? That's as important, right? When you're doing small and mid cap investing, unlike say you buy DBS, you keep it in your account and you collect your dividend and you don't have to worry too much. With small and mid caps, you need to be aware of what is happening, right? So you need to look at their quarterly earnings, how is this company doing, and also be prepared to cut losses or course correct as you need, right? Again, that's something that we do with our research coverage. And also have some basic principles in place into, as you say, at this point I will exit, right? So I think you need to have a balance, but having small and mid caps in your portfolio will give you this. You see that yellow line over there? That's our small and mid cap portfolio that we actually recommend to our clients. And that's actually outperformed the MSCI Singapore by quite a bit, right? Some of these companies that we have doubled or tripled, right? But that requires work, right? But it's worthwhile to do. And with that, I'm going to stop and take questions.
Thank you so much, Mr. Dylan, for the insightful introductions to macro trends and split investing. It was truly an eye-opener. Now we'd like to open the floor for any Q&A sessions. For any Q&A that you may have. For those of you who have questions, you can head over to the mic stands at the ends of the room. This is your chance to ask any questions you have about the current macro environment or even gain insights into his role and experiences. If you have a question, please feel free to head out front.
Hello. Good afternoon, Mr. Thilan. I'm Isaac. I actually have a question which I wrote down. Having discussed key metrics for identifying promising small and mid-cap companies, what are the key red flags investors should be mindful of when evaluating small and mid-cap companies to avoid potential risks?
Yeah, so I would say, and I mentioned it when I was talking to as well, I think governance, right? I mean, we've had, I think I cannot emphasize enough, when you look at small and mid caps, the numbers part is easy, right? You've got annual reports, and Singapore is one of the most transparent markets there is. So you actually have very good information when it comes to doing that quantitative and the qualitative aspects. The part that you don't have a lot of insight, especially for small and mid-cap companies, is governance, particularly in terms of management, right? Because a lot of them are run by families, they're run by, they're not particularly liquid, they're not particularly transparent, and sometimes their interests are not really aligned with minority shareholders. So I think one of the main things that we always look at is on the governance side, right? How has management acted during past cycles, right? When the stock price goes up, how does management act? When stock price falls, how does management act, right? And one of the disadvantages you have in small and mid caps versus the large caps is, with the large caps, a lot of that work is already done for you because you have things like ESG ratings, where the G, the governance, is already kind of done and there's a rating, right? So we actually spend a lot of time. So like my team, for instance, when we do a small and mid cap piece of research, we look at about hundreds and hundreds of parameters that analysts will go through multiple annual reports, news clippings, Bloombergs, all those sorts of things to kind of build that. So obviously, as a retail investor or as a young investor, you will not have that level of detail. But I think you still have a sufficient amount of detail that you can glean from what the press says about management, right? How does management act during times of crisis? Do they hide stuff, or are they much more transparent? Right. So I think governance aspect is one of the biggest red flags.
Thank you very much.
Are there any other questions?
Just for faculty students who know me, just wondering, is there any way to say, is there any exchange rate fund actually focuses on small caps in that for new investor, new young investors?
Absolutely. I think that's great. I'm not aware of any ETF that does small and mid caps. In Singapore, I mean, there are enough Russell 2000 ETFs available for US equities and things like that. But Singapore probably not. And I think part of that has always been because Singapore's generally a lot of focus on the institutional side has been for the large caps, right? It hasn't really had much attention being paid to the small and mid caps, particularly because we had quite a few crises and things like that in the past. But I think not all small and mid caps are alike, which is what I'm saying, right? So I think screening and doing a bit of homework as a young investor, I would my first investments would always be the safer, larger cap companies, right? But then I will have a little bit of a speculation pot that I will use. But for that, I will always have to do my own homework.
Do any of y'all want to hit to the side to ask any questions?
Hi. The main question I wanted to ask was, we have a lot of stuff to do being poly students, and you said a lot of the stuff that helps contribute to making really good decisions is homework. But if you can't keep up with our own poly homework, how do we do that?
I think that's a great question. But I'm gonna say this. I think it's about time management and it's about prioritizing, right? I mean, I fully sympathize with you about your homework, and I'm sure your lecturers here heard you. And that's important. But I think so you have to figure out what are your priorities, right? So obviously getting your diploma is important, but I think also being invested and learning about finance and money and how you manage it is also important, right? I would say it's as equally important skill to have as your diploma, right? A lot of people have diplomas but they don't have money, right? So you want to have both. So I think spending time to manage your time, to understand. I mean, I think all of us have the same sort of pressures. Maybe not homework, but we all have other pressures in terms of our time. I think the thing that has helped me in my personal life is how I prioritize. Right? I have a list of things, and I figure out, okay, do I need to do this right now? Right? I mean, every day when I walk into my desk, the first thing I try to do is what is my priority list, right? So and which are the monkeys I need to get off my back first. And I think you get good at it, trust me, right? Over time, the more you practice, it's like everything else, the more you practice, you get good at it. But I do urge you, just as you prioritize your poly work, getting an idea on finance, getting an idea on money, and building a relationship with money is important. So, find the time.
Thank you.
Mr. Taylor, can you?
Yeah, I can hear you.
So my name is Emmett, and I would just like to ask you a little bit on the small and mid cap stocks that you do. Is there any emerging markets that are kind of whatever the stock does? For example, the stock could be in more towards finance, manufacturing, or even like a little bit on hedge fund. Is there a trend in the small and mid caps that you do into which sector they tend to be in?
Okay, so that's a great question. So basically, And that's not just for small and mid caps, right? For any stock, right? A stock rises and falls to a large extent based on which part of the cycle it is in, right? So like for a bank, it will rise during times when interest rates are rising, right? So it's in the right cycle, right? An oil and gas company will start to rise when oil and gas prices are rising, right? And vice versa. So it is about identifying. So you start with identifying, looking at what is happening in the macro environment and which cycles are rising, right? So I would say the whole AI cycle to a large extent, because I think we're still very early in terms of user application and things like that. It's something that's rising, right? The sustainability cycle, despite what a lot of Americans say, is rising because most of the world is moving more and more towards alternative energy, right? So that's a cycle that is rising. But there's also been underinvestment in oil and gas for short-term needs because of Russia and Ukraine. So the oil and gas cycle is also rising. So you start with looking at what are the cycles that are in an uptrend. Then you look at what are the companies that are within that who will benefit, right? Upstream, midstream, downstream, right? And then you decide, okay, now that I've identified the cycle, now that I've identified a bunch of companies, then let me apply a screen that says which are the cheaper companies from valuation point of view, which are the companies that have margins that are growing, which are the companies that have good balance sheets, and then which are the companies that have good balance sheets. So that you start with that, right? If you start with the other way, where you identify a company and then you try to fix your thesis, right? That's going to be very, very hard. That's something I tell my analysts all the time, right? Like a lot of analysts come in, they're in love with the company, they go, oh, this is a buy. But I said, have you actually looked at the balance sheet? Like, no, it's great. You know, CEO said this, and I said, but is it growing? Right? So if you fall in love, then you with the company, not any other point. And then you try to work backwards. Most of the time you'll get that follow. But if you identify the industries, identify the cycles, then go from there, tend to make winning decisions most of the time.
Okay, due to time constraints, we have to move on to the next segment, but for those who still have burning questions for Mr. Dillon, you can approach him during the optional networking session after this forum. Thank you, Mr. Dillon, for your insights. And now let's switch things up. Now let's see who was really paying attention during the talk.
Please take out your phones and scan the QR code to join the activities. And also there are many prizes to be won for the top 5 places, which are like merchandise from Maybank. So if you're interested to win these prizes, go ahead and scan the QR code. 10 more seconds for everybody to join.
Remember, there are merchandise to be won. We'll be starting the quiz now.
We have Nathan and Singapore taking the lead and the first 2 places.
Oh, we have Evan taking the lead now. Oh, Nathan is back on track. It's a close fight between Evan and Nathan. Who will be the winner?
We should have done it, yeah. Okay, let's do it. 7 seconds per question. Are you really rocking? What the fuck? Bro, you're cheating.
Ending in 5 seconds, so we finish our questions. 5, 4, 3, 2, 1. Okay, congratulations to Evan, Nathan, and 54311. These 3 participants come down here and take your prizes. Number 4, number 5, Bruno, Minor, and Ethan can also come and take their prizes. Can we invite Mr. Dylan to give out the prizes, please?
Yeah, I don't want Apple share. I don't want Apple share. You want Apple share? Yeah, but you want Apple share is like $2,000. What? No, it's 200, I think. It's 220. What?
Can you all line up according to the Evan, Nathan, 543119, Bruno, Minor, and Ethan. Next is Nathan. Now it's 543119.
Not gonna happen.
And lastly, tea for evening.
The winners will all stay over here, stay downstairs and take a picture with Mr. Dylan now.
Okay, we'll have a group picture with Mr. Dylan now. Can all the 5 winners get over there?
Quiet, Prestige, you can't shout like that.
And thank you to everybody who participated, and thank you so much for paying attention, and this is such a great time for us. So now we'll be moving on to our second keynote speaker, Ms. Alice Lee, Head of Catalyst Sponsor and Capital Markets ESSGX for the healthcare, maritime, offshore services, logistics, commodities, and enterprise technology sectors globally. Ms. Alice plays a pivotal role in driving IPO growth across these sectors, working closely with government agencies, banks, and professional firms to enhance Singapore's capital markets ecosystem. With a wealth of experience in corporate finance, she has supported numerous IPOs, ECM, and M&A initiatives across the Asia-Pacific region. Let's give Ms. Alice a warm round of applause.
Very good evening to everyone. Right, thanks for the invitation to speak to final year students, right? I'm sure. Not all. Okay. Today I'll share about Singapore capital markets and how we actually help the SMEs company to raise funds and support their growth. Okay. SGX is the most international exchange. We have about 620 listed companies. 411 of them are listed on the main board, and 209 are listed on capitals. Right. Of the total listed companies, a third of them are actually from overseas, and 2/3 are local companies. If you can see, of the overseas companies, 1/3 are actually from Greater China, 1/3 from Southeast Asia, and the other 1/3 is from the rest of the world. So we pride ourselves as a connectivity to ASEAN, and then it's home to many of the ASEAN champions. If you can take a look, the largest cluster is actually from Malaysia. We have 48 listed companies from Malaysia. This includes IHH. I guess you're more familiar with Mount Elizabeth Hospital, Parkway East. Yeah, this belongs to the IHH group. Top Glove, they actually manufacture medical gloves for all kinds of medical industries. The next cluster will be from Indonesia. We have 21 companies from Indonesia. This includes Lipo Wheat. Besides that, 4 from Thailand. I think ThaiBev is something that you're familiar with. They run the brand F&N and Oshi Green Tea. This is the latest in the market. Philippines, Del Monte, your prune juice. Right, many of us grow up with the prunes and the prune juice. Okay. So why Singapore? The companies listed here are able to tap into a very diverse investor base, right? They include global blue chip institutional investors, the wealth management hub, because we are known as a wealth management hub. So there's a lot of wealth management offices set up in Singapore. So if you take a look at the data, as of end of last year, we have more than 2,000 family offices being set up in Singapore. These family offices, comes from around the world. It is a huge, significant increase from about 4 or 5 years ago, where we only have 500 family offices. There's also a huge number of private equities and venture capital funds, right? More than 300. These venture capital funds and private equities are very important, right, to our companies because they support them when they are still private and before they actually are ready for the public market. So, more than 1,200 of these institutional funds that are based in Singapore are listed, are invested in our SGX listed companies, right? They are able, the listed companies are able to reach out to all these different institutional investors. Last but not least, I think it's good to know that our asset under management in Singapore is about Sing dollars 5.4 trillion. Yeah? Okay, the chart to the left is actually the different retail brokers that covers the Singapore stocks. The latest on the block will be the online traders that I believe the young ones here will know them. The interactive brokers, Moomoos. I think many of you may have an account, online account, right? Okay, as I mentioned, we have two platforms, the Mainboard and the Catalyst, to support companies at various stage of their growth. Right, Mainboard is mainly for established companies, companies with good branding, so they will be able to access to more institutional investors. It is monitored and regulated by SGX. We do have a quantitative requirement, right? In order to list on Mainboard, you need to meet a market capitalization of 150 million with the latest operating track record, being profitable for the latest financial year. Right, this is the most common criteria that the company will use. The other platform, the Catalyst, is more for the small, medium-sized companies, companies that are in their rapid growth. Right, the time to market will be faster, and then in terms of headroom for fundraise, it will be much easier as well. However, it's important to note that there's no quantitative requirement set by the exchange. But the sponsors are the one that sponsors these companies to list, so they will have their own in-house criteria. Right? Minimum, usually they will look at a profit level of about maybe 3 million. Okay, I will not bore you with the process. So all you need to know from these slides is that in terms of the timeline for a listing, on average you will need about 1 to 2 years, starting from the kickoff. For our Mainboard listings. If you are fast, it will be within 12 months. But sometimes when a company has got a lot of operations overseas, you need a lot of time for due diligence, for all the different checks. So it takes longer time. In total, it's about 9 to 12 months if it is fast, right, for the Mainboard. As for the Catalyst, it will be shorter. It's about 6 to 9 months. And that will be the reason why some of the bigger companies will also choose to list on the Catalyst, just because it's a faster timeline. Right? The timeline that you see is just the timeline from the exchange perspective. Our approval is not as long as the preparation time. So approval-wise, it's about 8 to 12 weeks for Mainboard and 6 to 8 weeks for Catalyst. So, we have two platforms. We are proud to say that we have about 24 companies that has graduated from the Catalyst to the Mainboard over the last 15 years. Right, the most recent 5, as you can see, are Union Gas, Green Venture, Rex, TopMed, and LHN. Right. They have an average medium return, annualized return over the last 5 years, about 9.4%. So that is the reason why there's two platforms. The intent is to help the small, medium-sized companies to grow, to be ready before they transfer to the Mainboard. The transfer is actually a formality. All you need to do is to meet the main board criteria. So I guess, the next couple of slides is more of a case study, right? All are local Singapore company, LHN. Now, LHN transferred from Catalyst to Mainboard. It is a real estate player. They actually redesign some of the underutilized real estate, right? Collywood co-living that you see in Boon Lay, River Valley, Balestier, this is actually run by LHN, or Works Plus Store, that is also industrial properties. So you can see that LHN has also raised funds after IPO, right? They raised about 2.2 billion via equity placement. So one important key point for companies that list is because they don't just tap the market for funds at listing, but they can continuously come back to the platform to raise funds to help their expansion. The next one is Grand Venture Technology. It's a precision manufacturing company. Right? It's a company that also transferred from Catalyst to Mainboard only purely shortly after 2 years of listing. Right? The market capitalization has grown from 64 at IPO, 64 million to 215 million currently thereabout. So it's a very substantial growth. It also showcased our SME in Singapore is able to raise funds after listings. So that is what public market is for, so that you can always tap the market whenever you need the funds for expansion. Hyphens Pharma, leading specialty pharmaceutical company. I guess you will be very familiar, Ocean Health Supplements. If you go to Watson's, Guardian's Pharmacy, you will see Ocean Health. So this is carried by Hyphens Pharma. They also carry brands like Ceradan, TDF, more aesthetic related dermatology products. So this company was listed close to about 7-8 years ago. When they were listed, they just purely has a presence in 1-2 countries, but they have expanded to 5-6 countries right now. Raffles Medical, close to the heart to many of us. Right? Raffles Medical has been listed for many years. They have a very strong investor following and analyst coverage as well. Current market capitalization is 1.6 billion. Okay, iFast Corporation. It's one of the successful case that is listed on Mainboard. It's also a homegrown fintech platform. They were established 25 years ago, listed about 10 years ago. So market capitalization now is over 2 billion. So from a IPO market cap of 200 plus to 2 billion is about 10 times, right? So we do have good companies, right? Good SME companies, as long as there's right investor support and ecosystem support, they can grow. Another thing I wanted to highlight for this slide is that post-listing, they managed to get the funds to actually support their acquisitions. So from Singapore, they've expanded into 5 other countries as well, right? To UK, China, Malaysia, Hong Kong, and I think latest, India. So to have a successful capital markets, I think we need a very strong ecosystem and collaborators to help support the market. So we work very closely from the exchange perspective. We work very closely with professionals, like of course, the partners we have today, like GEMCONS, Maybank, even Singapore Polytechnic. At the same time, we work very closely with all the government agencies. So as you can see, there's MAS, MTI, EDBI, Temasek, right? And most recently, in order to support the capital markets, Temasek has actually set up an anchor fund. We call it 65 Anchor Fund. They actually support the company at their listings. Then the other fund is EDBI Growth Fund, right? That supports smaller companies that they are maybe 2 stages before listings to allow them to grow before they tap the public market. And our MAS even gives subsidy for companies who are looking to list in Singapore, right? It ranges from $300,000 to $2 million depending on which platform you actually choose. So, last but not least, Thilan has mentioned just now about Equities Market Review Group. So the entire Singapore Inc. is actually coming together with all the various stakeholders, set up this market review group since August last year. So they will have a finalized report by August this year, seeing how best we can revitalize the capital market on the regulatory front and also on the enterprise market front. So stay tuned. Okay, just now everything is about equities, right? Not forgetting bonds. We also have a very strong bond market. Currently, amount issued about $3.4 trillion with more than 1,900 issuers across 26 different currencies, right? We are also, we have the 50% of the market for all the G3, GXSC bonds. One key point about bond listing is that it's very efficient. The application process is only 24 hours. The issuer just needs to appoint a issue manager to apply with an application, and you will get an approval within 24 hours. So, after all this, I think, I just want to echo what Thilan has said, right? Singapore market still remains very attractive, all right? And for 5 key reasons. First of all, defensive and resilient, right? Like what Thilan has shared, that Singapore market is actually one of the best performing market among ASEAN last year. So if you look at STI, the total return gain is 23.5% in 2024 itself. And this STI actually, majority of the weightage is 50% comes from the banks, and the remaining real estate and the rest of the sector. Second reason, Sing dollars currency. Our currency is actually very strong compared to the regional currency. So as such, it is a good market that actually can host the value of what you invest in. Singapore is not just a developed market, because all the different companies that are listed in Singapore also have an exposure in ASEAN and rest of the world, right? You will be able to tap on to the small, medium-sized companies, mid-cap investments opportunities as well. Number 4, we are one of the largest, highest dividends paid out globally, 4.8% for the STI yield, and undemanding valuations as well. So, if you are interested, we do have a very good SGX research platform. We run our own in-house research articles. We interview, CEOs, CFOs. We call it the COPC. Or we actually talk about the company 10 in 10. There are company spotlights, market updates about different sector, thematic. Sometimes they will talk about healthcare, technology, etc. And most importantly, there's a Telegram channel. So I think most of you all have Telegram. Do subscribe to it. It's free, and you get to understand a bit more about Singapore capital markets. Yeah. Thank you. Any questions?
If you have any questions, yes. If you have any questions, you can make your way to the microphone stands at either side of the lecture theatre.
either I'm very clear or no. Sure. The fintech, is it? Actually, I guess, Exchange itself is also a technology company. Right, with the various different fintech platform that has come on board, we believe that it's more complementary than just a competitor. For example, Momo Interactive Brokers, your iClass that you see, they also actually help us in reaching out to retail investors that may not be able to, we may not be able to do so in the past. Yeah. Hopefully that helps to explain. Yeah.
Anyone else have any other questions? No question?
Because there's this recent development, NYSE is going to take 22 hours. Does that constitute a challenge, especially previously you always say that Singapore was operating for foreign currencies. This time zone, we're using US as a seed to trade Singapore markets, but if the NYSE is going to trade 22 hours a day, does that mean?
Actually, for us, we have a few different initiatives that we are working on, right? Currently, in fact, we do have an MOU with NYSE. We also have an MOU with NASDAQ, where companies are able to actually dual list on Singapore and also either NYSE or NASDAQ. So we are collaborating with all the different exchanges to tap on various advantages, right? So 24 hours trading, whether it is 24 hours or 12 hours per se, if a company is good, we believe that people will also, investors will trade them in Singapore. Yeah. And the other thing is because Asian hours is ahead of US time, so if let's say it's a company with some Asian presence, right, they will take advantage of Singapore Exchange first before
Does anyone else have any other questions?
Can you hear me? Okay, so the question is, what are the key challenges facing Singapore's capital market today?
Okay. I guess the reason for the equity review group to be set up is to address two issues. One is they're actually interrelated. It's about liquidity and as well as valuation, right? Liquidity wise, because we are so successful in REITs per se, we are known for a new capital market, right? As such, many of the investors actually hold the stocks for long, so there's no liquidity. At the same time, some of the small, medium-sized enterprises that are listed, they also prefer to hold more shares, so the float in the market is actually low. That also leads to low liquidity issue. So this is the challenge. But one needs to look at the specific sector, like what Tina has said, right? Depending on the sector, not all sector has got low valuation, low liquidity, right? For example, maybe if you look at healthcare stock, tech stock, banks, right? The turnover velocity, the liquidity is still very high. Yeah. All right. Hope this helps.
Thank you so much.
Anyone else have any questions?
Yes, hello. First, thank you very much for the talk. And I think today your share price was fantastic.
Yeah, target is 1460.
Correct. 10% thanks to your first half. So thank you. So as a shareholder, I'm very happy as well. Thank you very much for.
We are working very hard for you.
Thank you. Okay, so firstly, my main question is really, and I think it's coupled with the other question on the challenges. Firstly, the main thing is when you talk about the catalysts, right? When they graduate to a main board, what are some of the criteria? Have any of them like made it to the main board and subsequently on to the index fund, the ETF? Yeah.
So far, we have about 24 companies that are graduated, have graduated over the last 15 years. So every year we have one or two, every 2 years thereabout. The transfer is very straightforward. So the catalyst companies just need to meet the main board criteria, listing criteria, which is the most common is 150 million market capitalization. So all the catalysts that has transferred, they could come to the market about 50 million, 60 million, they go to 150 million market cap. So they will ask for a transfer as long as you're listed for 2 years. Yeah. So it's really straightforward for that. The next question about whether this company has become one of the components of STI, no, not yet, because the current bar is really high at about 5-6 billion
Okay.
size.
Yeah.
Yeah.
All right. Thank you very much.
Are there any more? Okay, if not, can I also ask a question? So could you share a little bit more about how Singapore's capital markets compare to like other international and financial hubs like Hong Kong or New York?
Okay. Because being a developed exchange, right, we always, not us, but issuers, for example, the company wanted to list, or even the professionals, so always compare ourselves with Hong Kong Stock Exchange, London Stock Exchange, NYSE, and Nasdaq. Right. Nasdaq and NYSE, they are very established. Of course, the investor base is very deep, and people who are tech-driven, especially, aspire to be listed in Nasdaq and NYSE. However, if you are not of certain size, I think that is not a market suitable for the Singapore SMEs per se. We have a few different listings over the last couple of years from Singapore. Hasn't done well when they go to the US, right? For example, Property Guru, TVCX, and a few others. Oh My Home, yeah. So we always think that even though there are friendly competitors, there's a reason why some of these Singapore SMEs or Singapore incorporated companies with Asia nexus should choose to list in Singapore, right? The visibility is there, and people knows you, right? And then there's also a sweet spot of certain size catalysts. Let's say from 15 million to about 5 million and below. You should always be in your home exchange, right? In terms of Hong Kong is pretty much a China-centric kind of exchange. So a lot of issuers are also concerned about the current geopolitical tension between China and US, and they will choose Singapore for our neutrality. Yeah. London has got quite a fair bit of challenges recently as well. So London Stock Exchange, it hasn't been really active. So not so much of a fierce competitor to Singapore Exchange. Yeah. Hope this helps.
Thank you so much, Ms. Alice. So I think if there are no more questions, are there any more questions for Ms. Alice? If not, then thank you so much for answering this question. So now we'll be moving on to our final round of quizzes on the SGX and capital market. So if you want to fill out your phones and check the QR code, will be generated soon. This time around, the awards are $50 Starbucks vouchers. Yeah.
Okay, we're gonna start in 10 seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay. Coming in strong, quad 88, 888.
Oh my. Okay, question. Oh my god. Okay.
Quad 88 and Miss K are tied at first and second place.
Oh, Beatrice and Elle and Noel have overtaken. Oh, Welcome has overtaken. Let's see who deserves the $50 Starbucks voucher.
We lost it. We lost it. Look at it. They already got 5. They've already finished. Yeah, they finished. Of course, there's no point. They already finished our 5. Resti, there's no point. I'm still gonna try. Why is projected to be the one? Teacher.
We'll be ending in 5 seconds. 5, 4, 3, 2, 1. Okay, can welcome Yixun and Elle to proceed over here to the judges. And Noel and Daniel can also come and take the prize.
We'd like to invite Miss Alice Green to give out the prizes to our winners. Please stand from first place to fifth place. Thank you.
And can all the winners stay here to take a group photo afterwards?
Hey, degrees of what? Let's keep up. As slow as possible. You don't need a sticker. This is
We'll be taking the group picture now.
What's he doing? It's alive. He was falling.
Thank you to everyone for all of this. Thank you to everybody who participated in the vote quizzes. And it is great to see all of you so engaged in the docs. So now we'll be moving on to the final segment of the forum. We have a presentation on Sheffield Green, which is a human resource company specializing in the area of renewable energy, including offshore wind.
Now let us welcome our final year project team from the Diploma in Banking and Finance with a round of applause. Present please.
ZQ.
Good evening, everyone. I'm Zachary, and with me, I have Wendy, Arvin, and Zacchaeus. And we are your organizers for today's investment forum. Today, we'll be sharing more about the renewables industry, and more specifically, a human resource company in the renewables industry called Sheffield Green. So the Sheffield Green Group was founded by Mr. Kee Boo Chai over 20 years ago, operating as a global recruitment company specializing in EPCI projects and the renewable industry, with offices in Singapore, Taiwan, and Japan. Sheffield Green's key management consists of Mr. Kee Boo Chai, who is the CEO, Chairman, and Executive Director, as well as these 4 other directors. The company's vision is to connect talent to power a sustainable energy future, with the mission to become a one-stop shop renewable energy recruitment specialist. In 2015, Sheffield Energy, a HR provider for the oil and gas sector, diversified into the renewable sector. In 2021, Sheffield Green was officially spun off and incorporated in Singapore to specialize in renewable energy HR solutions. 2023 was a momentous year for Sheffield Green. In October, they launched their IPO on SGX Catalyst. The proceeds were then allocated to Sheffield Green's global expansion. In November, a new office was established in Poland. To expand into European markets, their revenue also surged to an all-time high of around $27 million, from securing multiple projects in Taiwan, France, and Japan. Almost a year later, in October 2024, Sheffield Green established a new training center in Chiayi, Taiwan. Let's take a look at this video to find out more.
No pulse, no conscious. At CPR, someone to call for help, or 911, and someone to take an AED.
Well, that was a video that well encapsulated how Sheffield Green has progressed in just the past few years. But now, let's take a focus into Sheffield Green and in their macroeconomic conditions currently. And the first thing that I need to highlight is the big name again, Trump. So now, Trump has just recently established executive orders in just January 2025, favoring fossil fuels over renewable energy sources. It was just recent, but it is highly controversial today. So what are the impacts of this? Firstly, the rescinded electric vehicle targets. So this not only affects electric vehicle targets, but overall climate change targets as well. So this really just decreases the demand for the renewable energy sector, and the opportunities that the renewable energy sector can have in the US can stand to decrease now under Trump's administration. And this brings me over to my next point, over halted wind energy permits. So with this, current projects may also now have to pause, which therefore is not a good thing for the wind project, for the offshore wind sector, and it may signify losses as well. Overall, there is a signal shift away from the wind and solar energy sector, and it's going more back into fossil fuels. However, this is just in the US. Globally, there's still a strong shift towards renewable energy, and countries are pushing for it now. One big reason why is the need for energy security. For example, in Japan, there are projects such as Akita Noshiro and Goto Floating to reduce their reliance on liquefied natural gas, also known as LNG. And in South Korea, where 90% of their energy is imported, they are now pursuing the Ulsan 12 gigawatts floating wind project for energy security. And next, moving on to the EU. Now, we all know about the Russian-Ukraine war and the geopolitical tensions that surround it. Hence, now countries in the EU are pushing for energy security so that they will not have to depend as much on Russian fossil fuels anymore. Now, energy security is a very important factor in today's world, but another thing that we need to take note of is energy is also power in today's world. Literally and figuratively. With energy, now you hold influence. It can play a big factor when it comes to international relations, and countries use this a lot in establishing their own global power dynamics. So now that we've established how the offshore wind industry looks like today, let's look at how it will be like in the future. Firstly, technological advancements. It is really making huge changes today. Wind turbines are becoming more effective, more resilient, and also more cost efficient, as they can have more energy output with bigger wind turbines, while also being able to save costs with now more machinery. Secondly, it is also globally a thriving environment now to have offshore wind, as the global world is still moving towards a net zero carbon world by 2050, as many countries have highlighted. So therefore, this still increases the overall opportunities for throughout the globe, even though some countries like the US may be facing problems today. And with more projects, one thing that Sheffield Green can really tap on is the need for more skilled manpower in the offshore wind industry. And thirdly, need I say less about the environmental benefits that come about with the popularity of the offshore wind industry. With more wind turbines, there really can be a strengthened push towards sustainability, and it is now becoming a fundamental pillar if you want to move towards a clean energy world. Now, I can say so many things about all the different kind of factors, but where are the numbers to prove it? Here, we have the market expansion. The current market size is already doing quite impressive at 43.6 billion as of 2023, but with a compounded annual growth rate of 19.1% from 2024 to 2022, it is expected to reach a projected growth rate of $184 billion by 2022. Therefore, this is really a testament to prove that the offshore wind industry will excel in the future and it's resilient through current macroeconomic conditions.
Okay, so by now I'm sure we all know that the renewables industry will be growing, but at what rate? So by 2028, the total global operational wind capacity is actually expected to surpass 1,800 gigawatts. So if you're not a fan of physics like me, I'm pretty sure you're wondering what's gigawatts even. So let me put that into perspective for you. So according to the US Department of Energy, 1 gigawatt of power is actually can be generated by 100 million LED light bulbs. And if you stay in like a HDB flat, there will roughly be around 15 to 20 light bulbs in your homes. And so can you imagine 100 million? That will be able to power around 5 million homes. 1 gigawatt of power is also generated by 1.89 million solar panels and approximately 100 wind turbines as well. And if you remember from earlier, the total global operational wind capacity is expected to surpass 1,800 gigawatts. And if you do the simple math here, you would know that this will require a very substantial number of wind turbines. And the issue is that wind turbines don't build themselves. They require workers to build them, and they require consistent maintenance as well. So this gives rise to a major problem, and that is the demand for skilled workers. So if you can see from this graph over here, it's actually a graph from the Global Wind Organization 2024, and it shows the consistent shortage of skilled manpower. So, and this poses as a very significant risk because as all countries are accelerating towards renewables, they will require a lot of skilled manpower, and without that, such a transition could face very major roadblocks. And this is exactly where companies such as Sheffield Green comes in. So by being able to provide such specialized human resources such as offshore wind technicians and engineers, they are actually able to tap on the demand that's in the market right now. And considering them being such a niche market, they also have first mover advantage where they are actually able to establish themselves as a strong market leader. Furthermore, they are also able to capitalize on this market demand and also establish their own pool of clients as well.
Now we'll be looking at Sheffield Green's operations and how they are engaging with the industry. So currently Sheffield Green attends various events all around the world to help improve their presence in the industry. A few of those events are Global Offshore Wind Summit Japan, APEC Wind Energy Summit, and Taiwan International Smart Energy Week. So these events allow Sheffield Green to gain further insights in the industry and increase your professional network as well. So now we'll be looking at Sheffield Green's what sort of services Sheffield Green provides. So firstly, Sheffield Green provides human resource services tailored specifically for renewable energy projects and clients. This also includes sourcing skilled professionals that meet the requirements that will have the permits, the certifications, and the skills to help them. So Sheffield Green also provides ancillary services such as visa work permits and logistics. Sheffield Green is also in 3 different sectors within the renewable energy industry, such as green hydrogen, offshore wind, and solar energy. Now we're looking deeper into Sheffield Green's business model. On the supply side, Sheffield Green sources top-tier talent equipped with the necessary skills and certifications required by the renewable energy sector. Operationally, the company manages the entire life cycle of human resource deployment, from initial recruitment and training to on-site and continuous professional development. For customers, Sheffield Green offers tailored solutions that align with your specific project requirements, ensuring seamless integration from personnel to operations. Now, looking at Sheffield Green's financial trajectory, the company has demonstrated resilience and adaptability in the dynamic market. Notably, a significant portion of their revenue comes from Taiwan, showing the company's successful market penetration and strong market presence in such a key market. This also highlights Taiwan's growing renewable energy industry. Looking to the future, Sheffield Green is strategically expanding its global footprint to capitalize on these emerging opportunities. So the company is making significant expansions into Poland and South Korea, 2 markets with substantial potential for renewable energy development. In Poland, Sheffield Green is leveraging the country's commitment to increasing its renewable energy capacity, particularly in the wind energy sector. While in South Korea, the company is positioning itself to support the nation's ambitious renewable energy targets. Another 2 countries that Sheffield Green is expanding to is Spain and Japan. Both have strong support by the government from investments and policy supports. Spain has also recently signed an MOU to acquire a training center in Spain, and they will be able to position itself to start expanding in Spain. So lastly, to demonstrate our commitment to addressing the skills gap in the renewable energy sector, Sheffield Green is proud to announce the establishment of a new training center in Taiwan. This facility will provide specialized training programs to equip professionals with the necessary skills, and this will allow the company to generate a business model which emphasizes on recurring income through long-term relationships with clients, meeting industry demands, and seizing significant growth opportunities. So this ensures that Sheffield Green remains at the forefront of the renewable energy human resource sector, delivering value to clients and contributing to global transition towards sustainable energy solutions. Thank you. So now we'll be having a Q&A. We would like to invite Mr. Royston from GemCom to talk. As GemCom is one of the people managing Sheffield Green's investor relations, to help us answer any questions. So if you all have any questions, you can head to the side to ask the microphones. Any questions?
Renewable energy professionals?
I think, like I mentioned earlier, it will be the shortage of skilled workers. And also, I think because now there's a lot of local content requirements, so actually those governments actually want like the workers to be like local. That's why Sheffield Green actually established like the training centers to help to train more workers so that they can actually supply these people to the required companies. Yeah.
Thank you.
Why did I do it? I want to see it.
more questions that you guys would like to ask any of us? Yeah, I can take that question. So I think geopolitical tensions are now something very important that not just, I think every company in general has to be very wary of. And in Sheffield Green's situation, it just comes down to, I think worst case scenario is something like what's happening in the US now. Like the hotter wind energy permits, it really will just pause certain projects as for now. But I think what's really important is really just looking at how the situation can, I think looking at certain projections for any of these kind of situations will be very relevant. For example, we can still see that even though there are certain countries that may not be as progressive, but we can take a look at Sheffield Green's portfolio. Most of their projects are based in Taiwan, and now they have Spain, and Spain is part of the EU, which is now progressing so much in terms of their renewable energy sector. So I think that is something that we need to take note of.
So I'd just like to add on some final words. Globally, the world is moving towards renewables. Now, so of course, there's going to be concerns over some geopolitical concerns in certain countries. But I think the general direction is all towards transitioning from fossil fuels towards renewables, because our Earth really requires that transition. Okay, so that's something that is definitely going to be a longer term macro trend rather than just say 1 to 2 years kind of dynamic growth arena. So that's something which Sheffield Green will be able to capitalize on this long-term growth trend moving forward. At this current juncture, there's just a lack of skilled workers because this is an industry that's pretty new to the world, and therefore not a lot of people are well trained in this arena, and that's where this company is actually coming in the picture to provide that kind of services to train skilled workers and also continue to provide the necessary certification to ensure the future growth of this industry. Okay, so I hope that clarifies a little bit on that area. Okay, thank you.
Alright, and with that we have come to the end of this forum. So thank you so much for coming down here and just getting to know, and we hope that you think you have learned something from our forum. Okay, first, all SP students, you can scan this feedback form where you get your CCA points. And while doing your feedback form, we also do have a token of appreciation for our students. So you and Mr. Tila, you can just actually like the invite you on the page so that you can pass through the token of appreciation.
Would you rather? I know exactly what I did. Yeah, gain easier. If you know what I mean.
Alright, so if you guys have any more questions you would like to ask any of our speakers here today, you can stay on until 7:30 for our optional networking session. But other than that, it will be outside of the 17A, so you can just stay on. But if there is nothing else, then you guys are free to go. Yeah, but for SP students, please take note. CCA points will only be given if you complete the feedback form.
done. Oh, you leave it. Faster. So, here it is. I know exactly what it's about. I know exactly what it is. Come on. I know exactly what it is. Read it. Here is what it is. Read it. Here is what it is. Why is that? Just read it out. Alright, let's go. How come I can do like that?
So sorry to those who are leaving now. I apologize, but can you just stay on for a second? We totally forgot. We would like to take a photo with everyone here. So yeah, we'll just stay here and see it.
Okay, hello. Can I get your attention for the photo real quick? Okay. Okay. 3, 2, 1, smile. Okay, thank you.
Come on. Why don't we ask people questions? For fuck, we all ask us in LinkedIn and we wanna go ask what's your answer? Can you give me a power? Not in front of the it's not even on lah, dude. Bro, what's sharing the audio?
Yeah.